Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
So in any case, percent R, very similar to stochastics in RSI as well in measuring or seeking to measure the overbought or oversold levels of the market for any market. In this case, we'll talk about for Forex pairs. Well, if I say the word overbought to you, does that imply that you should buy it, or does that imply that you should perhaps sell it? You know, most of us have been trained that, overbought means it's come too far too fast. And so we're in this mentality of thinking that, oh, that must mean that it's got to come back down, or certainly it shouldn't be a buy at that point. Well, you'll see with my work that actually, based on very particular type of trading method that I look at, is that once I see that work together, then I can start to see it really confirm that we've got a unusual uptrend rather than the end of a trend up. So that's what we're looking for. Oversold works the same way in reverse on the downside. Now, one of the key modifications that I make in the percent R indicator is that most of your charting platforms are going to use a 10 or a 14 bar setting, meaning like if you're looking at a daily chart the last 10 or 14 days. I'm recommending, based on what I like to use and based on what the testing said worked best, that you consider using a 30 bar setting. So that means on the daily chart, we're actually focusing on the last 30 days. And that sounds like a long time back that would have a lot of lag in it, wouldn't it? Well, the thing is that percent R is almost like an unsmooth stochastic. It's very fast. It's very jagged. You need something that sort of takes the edge out of it. And so I find that at the same time gives it still enough responsiveness to be useful. And I find the 30 bar setting tends to work best for my purposes. I'll show you based on my rules. Now, what are my rules? Well, here you can see what I'm looking for is I'm looking for a situation in which for a bull trend, we're going to go overbought. Notice how I put overbought in quotes, because that's actually, when everybody else is getting worried, that's when I'm getting interested. Why? Because it's overbought, but yet, and for me, by the way, on a 0 to 100 scale, if I hit the 80% threshold or higher, usually above 80% especially, tells me that that's a situation that is overbought. Well, that bar's high, whatever the high of that bar is, so if it's a daily chart, the high of the day. If it's an hourly chart, the high of that hour. You name your time frame. It's the high of that particular time frame. If it then has a close above that, so that's the key word here, close, not intra-bar movement, but a close above that bar's high, then I'm getting interested. Then I'm actually getting bull confirmed, I call it, where things start to really go real nicely for me. So basically, you can see that's for a bullish trend being confirmed. A bearish trend, like a lot of the financial stocks have had, for example, over the last couple of years, and certainly the dollar's had its share of both bull and bear moves against the major currencies. Here we're looking for a situation in which we go oversold. Everybody be thinking, oh, oversold means it's washed out, right? It means it shouldn't drop anymore. Well, and sometimes that'll be true. Sometimes it may be, and it may bounce, and that's why I need this confirmation. If it doesn't get that bounce and instead it goes oversold below the 20% threshold, and then we get, again, the almighty close below that first bar's low, that's what tells me that, that's a bearish confirmation. That's what we've seen with a lot of the financially oriented names over the last couple of years. They just keep getting more and more oversold because you're seeing enormous selling pressure in these names. And so if you see that kind of selling pressure, you don't want to be stepping in and buying it if it's very, very heavy pressure. Sure, you can get little bounces. I'll show you how I like to get onto these bounces as what I call retests. But the basic principle is that you've got to align yourself with the major trend to really do your best trading. Okay, so here's a little more recent chart, taking it up through early '08. and then we'll actually be bringing it even further up here in just a little bit. But you can see, looking at percent R, what I'm looking at here is a situation in which when we went oversold back in September '07, that's the first point that's a major alert to me. Says, hey, something unusual is happening. It's going in the bottom 20% of all the readings. So you have a situation in which when that happens, do we sell it there? No. But if it breaks that low, and it usually needs to happen fairly quickly for me, if it breaks that low, percent R is saying that's bear confirmed right there. We haven't even broken the acceleration band or Bollinger Band yet, but percent R is giving us an early heads up. You can see that was happening back in early September of '07 when the U.S. dollar versus Canadian dollar, the CDD index there at ISE FX was there at about 104. And you can see that move went from 104 all the way down to about 91. You can see that we came close to coming out of this oversold environment on this pop-up. In fact, that was about the time where I mentioned to Steve that, hey, that pop-up, I didn't really, on that webinar, I said I'm not really bought into that bounce there, that it just looks like a bounce within a downtrend. And you can see that unless it violates that 20 level and then keeps going up after that violation, that's where you got to get out. So, for example, on this big reversal back up, that was a test back over the 20 level. You can see it just crossed back up over there. I don't get out there, but I say that high must hold. If it doesn't hold on a future close, I've got to get out. There's our exit the next day there in early November. You were done with that trade at about 93 and a quarter on the remainder of your CDD position. So, we do advocate a gradual type of approach where we'll typically look on an options trade to double half of our position. And then from that perspective, once we can double half of the position, you can really allow yourself the ability to do quite well. Now, if you'd like a PDF download David asked for, I would say, sure, just send me an email. I'll be happy to get everybody a PDF download to everybody that's interested. Just drop me one to my email address. I'll put it up here for you so you can send over any questions you might have. It's just simple, price@bigtrends.com. So just make a note of that, and I'll be happy to get that out to you here over the next 24 hours or so tomorrow when I'm back in the office. But, the basic premise here is that, okay, that was our downtrending phase. So then you say, okay, well, what about when it changes? What about when it goes to an uptrending phase? Well, now we've got to have the ability to change with it. So that's what we're looking for is this particular time when it goes overbought here. You can see it takes a few days to get going, but it finally goes above there. We need it to happen within 5 days or less. That happens on looks like the very 5th day. It confirmed bullishly. That was happening, as you can see, at about 98.5, on our way up to about 102. That doesn't sound like a lot, but what you'll find when you look at the options pricing for the ISE FX options is that because these vehicles are usually not that volatile, a 4-point move can be very, very meaningful over a period of a few weeks or less. So you can see during that whole phase, look at what happens. We stay overbought. That's where you look back and you see, gee, you've missed all these opportunities in the past from situations that have stayed overbought. I encourage you to go look at this, study this, see if this actually would work based on the things you look at and would, in this case, miss out on. You can see finally we get an exit on the remainder of the position there mid-December '07. You can see then it goes into kind of what I call a no man's land, kind of choppy. We do get an attempted breakout happening right in this area, and it does break out a little bit later. Here's a situation of a trade that's going to be a fake out. Initially gets us the breakout confirmation there, rallies for a couple of days, then it pops back down. You can see here you're going to get knocked out of this trade once it shoots below that low. So you're going to see it knocked out in that particular case back here at about 100.5 versus the entry that was up about 102.5. So that was about a 2-point loss. So that happens. I mean, that's just the name of the game sometimes.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.